So let's get right to the floor show and our traders, Scott Bauer and Sarge Guilfoyle. Scott, what was behind today's broader market bounce, and why do you think we're losing much of the gain?
I think that there was a lot of bottom fishing today. Apple obviously helped a lot. It was up $2-3 earlier. It's given all of that back right now. But I think that we are seeing some oversold conditions. There definitely are some concerns out there with CPI next week and then the Fed decision. So I think people overall are being a bit cautious. But to me, there are definitely some pockets here that are oversold, Apple being one of them. Now, I was looking Wednesday on that, or excuse me, yesterday, when we traded down about 173.5 or so in Apple. That, that low back on August 18th was right around 172. So I didn't get my buy in there. I was ready for it. If it trades back down there again, I am all in on Apple because I do think this is oversold. And this is not necessarily just buying into their big event on Monday. This is more from both a technical and fundamental standpoint. So I do think, Liz, over the next 50 minutes or so going into the close today, I do think we will end higher. I think some buyers are going to come in.
Okay, well, right now, let's call it. The Dow is up about 5 points. S&P in the red, down 1. The NASDAQ down 12. Sarge, I know Apple is your biggest holding, so today was probably a very interesting week to say the least here. But what do you blame? You can't really blame Treasury yields. They're coming down. It's not like they were spiking. And you can't blame oil totally, although oil has been on an unbelievable tear. So to what do you attribute all of the action that up until today looked pretty dismal?
Well, one, it's not my largest holding, but it is a holding. Now, Apple has a lot to do with the U.S. dollar as well. Yes, China's trying to force Chinese consumers to buy Chinese products. We get that. But the dollar index trend around 105. It's very strong versus the yuan right now. What's happening is Apple and other multinational large caps are going to have a harder time turning what they make overseas into U.S. dollars. So almost every S&P company is probably going to hit some kind of become the bug on the windshield, so to speak, right now, for the time being. Now, that's why that should be a boon for the small caps. I can see right now the small caps aren't doing any better. So we're going to a risk-off period right now. Now, what you can do with Apple, okay? Apple, it ran all year. It formed a cup and handle just in the last few days, okay? August was the cup. The last few days was the handle. This creates a 190 pivot. Now, if you believe this blows over, the target price becomes 228. You can add down to the 200-day simple moving average. And if that breaks, which is 162, that's when you panic. If you want to diversify a little bit, or should I give let's somebody else get in here. I'm grabbing too much of the
No,
the
not
time.
at all. It's absolutely value added. But you mentioned the small caps. The Russell's the worst performer this week. Well, not if you don't count the transports. But for the week, the Russell is down about 3%, 3.5%. And I guess, Scott, when you're looking for opportunities at a very confusing time, plus CPI next week, and then in 2 weeks, the Federal Reserve Open Market Committee meeting, which is the 2-day meeting, and then we see what they're going to do. We know that they will probably pause for September, but what about November? These guys have said that every meeting is a live wire. It's live, and they will be data dependent.
There's no question, Liz. And if you look at the eco data over the last several weeks, last week, it looked like great. We've got great eco data. The economy's slowing down. The jobs report from August was great. The Fed was, probably in a spot where they knew they could pause in September and looking good. And then all of a sudden that flipped over this week with the ISM number we got, which was a hot number, the weekly jobless claims number, which was the lowest since February. So what does that do? That puts even more question marks into Powell and the Fed. Quite frankly, going into the next meeting, they're not going to raise, but they might as well shake that magic 8-ball at this point to determine what the next move is afterwards. Because if they're data dependent, the data is all over the board. It is all over the board. So we're going to see, as you said,
last week we had some softer numbers. Yeah, I mean, we had softer numbers, so that was encouraging. But if you get a CPI number that indicates that inflation hasn't been slayed, they still got to do something. Sarge, what is the one name that you are waiting to fall enough so that you can scoop it up and you think is going to be a great investment?
Well, would have to say that would be Lockheed Martin right now. It's been down a lot. This is due largely to the failure to deliver enough F-35 fighter aircraft this year. And that's really the fault of L3 Harris, LHX, because they make a smaller component that the aircraft needs that they have not produced enough of. They've had a shortage because there's been some software issues with it. So this is going to push the numbers for Lockheed, although they said there's not going to be a heavy material impact in 2023. This is going to push more aircraft deliveries into 2024.
Yeah, I'm looking year to date.
So I think Lockheed Martin's down a bit.
Yeah.
I am long the name. Yeah, it's last sale of 422 and change. This is going to almost force a huge 2024 and 2025 for Lockheed Martin, given how many nations need to order these aircraft.
Lockheed Martin down about 13% year to date. Gentlemen, good to see you. Have a lovely weekend if you can.
You too,
Sarge
Liz.
and Stephen, Sarge Guilfoyle and Scott Bauer.